Thank you everyone for joining us today. We're here to discuss current events surrounding cybersecurity and cryptocurrency with Ron Sabo, Chief Scientist at Saga, and Carmi Bogot, VP of Business Development at Tel Aviv-based cybersecurity firm Hub Security. We'll start our webinar with a brief introduction to our speakers, and then I'll hand over the stage to Ron Sabo, followed by Carmi and Bogot, and at the end we'll hold a short Q&A to wrap everything up. I'm joined here now by Ron Sabo with a PhD in experimental condensed physics from the Weizmann Institute and an MBA from Tel Aviv University. Ron is the chief scientist at Saga, leading research efforts for both the development of Saga's unique monetary and governance models, as well as guiding their implementation. A CLOR scholar, he also lectures frequently at Tel Aviv University's International Program in Electrical and Electronics Engineering. Welcome, Ron.
Thank you, Shterny. Thank you for having me and for the kind introduction.
Yeah, it's great to have you here. Thank you for joining us today. We're also joined here by Carmi Bogot, VP of Business Development at Hub Security. Carmi holds an MSc in Computer Science and a BSc in Economics from the Hebrew University. Carmi was also the NDS Vice President of Business Development for over 12 years and played a key role in helping the global security company penetrate new markets worldwide. He's now the Vice President of Business Development at Hub Security and has a long track record of helping companies introduce new products to market. Welcome, Carmi. Thank you for joining us.
I'm very happy to be here.
Great. Thank you both for joining us today. I'll first hand over the stage to Ron, who will share with us a bit about coronavirus and its impact on the crypto sphere and the outcomes that it has had on the stabilization of cryptocurrency. Ron, take it away.
Thank you. Okay, so we are here today to discuss a little about crypto assets in these times of COVID-19. Specifically, we are going to see how Bitcoin and the stablecoin asset class has behaved in the last 3 months since the pandemic starts. And I will try to convince you that if one is looking for stability, it can do better than holding just stablecoins. A note before we start, everything I'm going to say is just my views and nothing should be treated as an investment advice, obviously. Okay, so let's start by looking at how Bitcoin has behaved in the last 3 months. Mid-February, when COVID-19 was just at its beginning, Bitcoin was traded a little bit short of the $10,000 mark, and it lost almost half of its value during the second half of March and of February and the beginning of March. With a more than $2,000 drop in only 5 minutes during what is become to known the Black Thursday in mid-March. It's been a very interesting times, but Bitcoin has recovered fully and surprisingly enough is traded until an hour ago for at least at exactly the same values it was traded 3 months ago. So no big change in the overall behavior of Bitcoin, which is kind of surprising if you are coming to think about it, since such a global crisis should have been Bitcoin's time to shine. Bitcoin started as a response to the Fed printing a lot of dollars back in 2008 to rescue the Wall Street. And we are again 12 years later at exactly the same situation where the American government is using their ability on the control of the US dollar issuance in order to save their economy. And, guessing how Bitcoin should have behaved is always a bad idea, but if I should have guessed, this should have been the time that Bitcoin price should start to increase as many as anticipated, and this hasn't happened yet. Is it going to happen in the future? I am not the one that is going to give any bets or anything like that. For now, that's about Bitcoin. There is a different asset class that have gained a lot of popularity in exactly these 3 times, and I'm talking about stable coins. So stable coins, the one are not that are not doesn't know that the terms are special tokens that are supposed to trade at exactly a given price. Usually it's stable against the US dollar. The prime token in the market is Tether or USDT. And in the last 3 months, it gained more than 80% in market cap, going from $4.6 billion to 8.8. The rest of the market is follow roughly in the same numbers of going up by 80%. And just last week, the total market cap for stablecoins broke the $10 billion mark, as you can see on the right. The fact that Tether is still leading the market is, for me, surprising, because there are a lot of rumors, speculation, and even more than speculations about the ability of Tether to maintain its peg. Just last year, they have published an announcement that says that they are missing some of the funds they should have been holding in reserve in order to support the $1 peg, but the market still believes in them. So this is another mystery in the crypto assets market. All of those stable coins, or 99% of the market cap, are all pegged to the US dollar. And when we talk about stability, we usually measure stability against the dollar. But my claim is that the US dollar is not stable at all. You can see over here the change of the dollar to the second strongest currency in the world, the euro, during, again, the 3 months period that we are looking at. And it went up and down by plus minus 5%, sometimes in a matter of 3 days, losing 5%. I wouldn't call such behavior stable. And this is not surprising, as the epicenter of COVID-19 moved from China in the beginning to Europe and now to the States. We are going to see more and more changes in values of different currencies. And if you're looking for stability, and this is what I believe should be your take-home message, the best way to protect from the pandemic is diversify. This is, finance 101 when you go to college. Just diversify in order to reduce your risks. When we come to diversify currencies, this is even stronger, because unlike other assets, currencies are measured one against the other. So when the dollar loses some of its value, it loses the value with respect to yen, pound, or euro, depending on how exactly you are measuring it. And if you are holding a basket of different currencies, you are necessarily going to benefit when one currency is going down, because the others are going up in turn. There is one specific basket worth mentioning, and this is the SDR, or the special drawing right. This is a basket of the world's most prominent currencies. It was set by the IMF, the International Monetary Fund, more than 50 years ago. And central banks and other international organizations are using the SDR as their reserve currency. So while most of us are used to think in dollar terms, if you are a central banker, you are used to think in SDR terms. The SDR basket is updated every 5 years, and currently it's all dollar, euros, yen, yuan, and the British pound in different weights. And now it's the time to talk a little bit about Saga, because the strengths of the SDR and the fact that it is proven to support stability for more than 5 decades is the reason that we chose the SDR to be our reserve currency, and not the US dollar or any other single currency. And this is one main difference between Saga and stablecoins, but this is not the only difference, or the main difference even. I wouldn't call actually Saga a stable coin, but more of a stabilized coin, and the difference comes in the target function. While stable coins aim to be stable against either the dollar or the SDR, Saga actually aims at something somewhere completely different, at becoming an independent and uncorrelated currency, just like Bitcoin. We do differ from Bitcoin in the path to get there. Bitcoin rejects all traditional finance and try to avoid it, while we took a completely different path, embraces central banks tools from the history in order to start Saga at the beginning when it doesn't enjoy a lot of trust, is anchored to the SDR, and slowly and algorithmically as our currency gain traction and trust from the market, leave the SDR anchor and aim for the independent value we are looking for. And just a little bit details about Saga. We have launched the currency late in 2019, so a bit more than 5 months ago. It is UK based and fully compliant with all the regulation over there. And the monetary model that I have very briefly described now was built with the very supportive advice of world-leading economists, notably Professor Jacob Frenkel, the Nobel laureate Myron Schultz, Leo Melamed from CME, and Dan Galai, who is behind the VIX, the fear index. Some of us might be familiar with. That's the main thing I want to talk about, to show that Bitcoin hasn't behaved as one could expect, while the market goes to stable coins, and that smarter money could try and find even more stable terms than just US dollar pegged stable coins.
Thank you, Ron. That was really fascinating. I'd like to just ask you maybe a question is, what determines the supply of SGA tokens?
Okay, so our smart contract on the Ethereum network is managing the supply in a fully decentralized manner. So unlike fiat currencies, we cannot decide that now is the time to print more SGA. The supply is completely elastic and determined by the market, in the sense that if people believe in something and want to buy more, or believe that the price is low, they send Ether to the smart contract, which mints new tokens and put the Ethers in fiat form in our reserve. And if at any point a user wants to sell his token back to the contract, he just sends them to the contract, and these tokens are burned and the supply decreases.
Interesting. And as you know, trust and security are very important when it comes to cryptocurrencies. What makes users safe and secure when working with SGA tokens?
Okay, so currently SGA is a very small currency and small project. And since we don't want to ask users to trust us, we refer to other organizations that already enjoy trust. In this case, the banks that host our reserve. So if anyone goes online to saga.org, our website, under the performance page, you can see a daily attestation from our reserve holding banks, attestating for the exact amounts of the different currencies that makes the SDR composition. So you don't need to trust us, just trust the banks, as most of us are trusting the banks with most of our value. So we are referring to this trust at the beginning.
Fascinating. Okay, so I'm going to hand over. Thank you so much, Ron, and it was really interesting discussion. Thank you for sharing with us about Saga and giving us some insight. I'm going to hand over the stage to Carmi. I just want to make sure that Carmi unmutes himself before we begin, and I would love to hear some Carmi's insight into crypto security and what it takes to actually keep cryptocurrencies safe and secure in today's digital era. Take it away, Carmi.
Oh, thank you very much. So first, I'd like to thank Ron for that very educational discussion. I've always wondered how you could find a stable haven with cryptocurrencies, and I think it's very, very useful, especially in these times. I am not going to talk about how to find a stable cryptocurrency. I really don't know. But I do think that if you've got one or you buy one, you'd like to store it in a stable place or in a secure place. And that's what hub security is all about. Historically, if you had regular currency, you would take it to the bank and the bank would store it in a safe. It seems like normal, but actually the safe would always be different than your wallet at home because, at home you can store money in your wallet. At the bank, you would store it in a safe. Believe it or not, there are some companies that use a PC at home for wallets, and they use the same PC at the bank. And that doesn't seem to make much sense to us, since we think that an aggregation of funds should definitely be stored more securely than a single person's wallet. So now, not only is it true for how you store it, but cryptocurrencies and digital assets are under constant attack. And things that you might think would be safe before are not that safe. Simple things like a Chrome extension, what looks to you to be very tame, and it could be any extension, gives the extension full access to your browser. And once it has full access to your browser, if you happen to use that browser or even another program in that computer to store your crypto wallet, your money can be taken away. So there are many, many attacks on cryptocurrencies. And since they're not physical and since they're digital, they actually are even easier to steal. So when buying cryptocurrency or when creating systems for cryptocurrency, it's very important that those systems are based on a secure infrastructure. And that's what we provide. We focus on a secure infrastructure. Our company was founded by the people that provided security for the Israeli military forces network. And we've taken that know-how and we've made it commercial. An HSM is actually a known term. It's a hardware secure module. And the big box that you see in the corner here, lots of people have one of those. They're not like ours, and we'll get into the difference, but back-end HSMs are very common. The other thing that we have is what's called a mini handheld HSM, which is not common. And that is a very secure device that you put in people's hand and allows them to provide end-to-end secure communication with the back-end component, thus creating a platform that is very secure and keeping your cryptocurrencies in a secure place. This slide just illustrates a very, very, very high level of what's going on. And from this side, you can see that authentication is done using the mini HSM. This is the company officers doing a wide range of activity that we might have, like know your customer activities, whitelisting, smart contract management, and all kinds of other policy creation, policy enforcement are all done through a secure identification. And then all transactions go to the blockchain from the hub, and all the secrets are stored in the hub. This actually makes the ability to create, modify, add things to blockchain more secure and more efficient than with other systems, because all of it is done inside. And what we mean inside is actually, if you look at HSMs used to fall into two categories. The first category was all hardware, which would mean that the HSM was secure, but all of its logic was in chips, which means that if it needed to add anything outside the chip layer, it would take a long time, and certain things were just impossible, like policy enforcement and blockchain wallets are not managed within traditional HSMs. On the other end, as I said, if you take a regular PC and you run everything in software, it's very, very versatile, but it's not secure. Our company has a HSM based on secure firmware, which gives us the security of hardware with the flexibility of software. So traditional PKI and RSA, which is not part of cryptocurrencies, but is a regular HSM function is done inside. Smart contracts, identity management, blockchain wallets are all done within the confines of the HSM. Make this a very secure and flexible platform for companies that actually provide cryptocurrencies to end consumers. There's a full list of features in here, which I'm not sure it's important to get into. I'll just mention a few. There is a standard, I'm not sure that everybody's aware, called FIPS. FIPS 140-2 is a standard by which you can define the level of security of a hardware platform. Level 4 is the highest level, and our hardware is designed to meet the requirements, the stringent requirements of level 4. One of the things that you must have to hit level 4 is anti-tamper self-destruct. That's a feature that actually means if the platform sees that it is under attack and detects some methods of trying to read the secrets within the platform, it goes into self-destruct mode and it burns all the secrets inside the chips, making them inaccessible to the hackers. Other things that are obvious to us is the no operating system. I'm sure that everybody has a computer at home, gets told patch your operating system all the time. The reason you're told to patch your operating system is because they keep on finding security holes in it. In fact, operating systems are one of the largest places of vulnerability for systems, so we don't have one. So we've got nothing to patch since it's not there. And that is just a top level of our HSM. Like I said before, when investing in cryptocurrencies, it's very important to remember Ron's lecture and to get the right type of currency so that you can get through troubled times. And then it's good to put that currency on the right platform, which is what Hub Security does. I think I'm finished at this point, and we'll go over to questions. Thank you.
Great. Ron, are you there? Thank you so much, Carmi. That was really fascinating. Thank you both, Ron and Carmi, for such a fascinating discussion. I'm so glad that we got the time to cover it all today. All these require deeper discussion. We're just grateful that you took the time to be able to flesh them out and tell us both about what Saga and Hub are developing in terms of stablecoin development and crypto security. So thank you. Now I'd like to move on to our Q&A. I'd like to take the opportunity to open the floor to our attendees. Anyone who might have a question, feel free to drop it in the Q&A section below or in the chat box if you can't find the Q&A. That is fine too. I think we already have a few questions here. I have one for Ron. Given the halving of mining rewards in May, shouldn't we consider the current price of Bitcoin to be more solid now?
Interesting question. There have been a lot of debates before and after the Bitcoin halving that happened just this Monday, or was it last Monday? So, personally, I don't believe it should have any real economical effect on the price, but it could have a psychological effect. The reason is that, like anything in Bitcoin, everything is known to begin with and should have been taken into account when it comes to the pricing of Bitcoin. Economists would have called it the efficient market hypothesis, which means that the price of assets should reflects all the knowledge available to the market. In the case of Bitcoin, the halving has been known from the beginning of the protocol. So I don't see any reason for us looking differently at the price post the halving.
Okay, thank you. I have another question for you here. How would Saga value behave in an inflationary or deflationary environment?
Okay, so I haven't had time to go into the details of our monetary model. For those interested, you can see it on our website. It's very detailful, but the essence of it is using variable fractional reserve to connect between the SDR based value and the independent value that Saga will get once it's achieved market adoption. And when in an inflammatory environment where the SDR loses value, this reserve ratio probably would go down to allow greater support of SGA, while in deflationary it will do the opposites and rely more on the increasing value of the SDR.
Interesting, thank you. We have more here. Again, if anyone has any Q&A, you can drop in the Q&A section before we wrap things up. I have a question here for Carmi. In the HSM Vault, Hub Security's HSM Vault, is there complete Redblack?
I lost her. Oh, shit.
Sorry, did I freeze?
Yeah, you froze for a little bit. You were asking me that question about red and black separation. And so
right. Did you hear the full question, or should I repeat it?
No, I read it from the Q&A. I think it says in the HSM Vault, is there complete red-black separation with completely isolated processors, memory, FPGAs, etc. So just a little bit about the architecture that was shown on the previous screen. Our isolation is accomplished in a bunch of different levels. First of all, we have something that we have a patented firewall in firmware. And that is actually a patented technology by Hub Security, which doesn't do the initial separation between the inside world and the outside world. It's done by a firmware firewall, which is very hard to attack and also has some very unique features for keeping things out and also keeping things in. As I pointed before, we actually have the ability to download applications, and one might ask, if you can download applications, then those applications have access to secrets. Isn't that a vulnerability? Because then the secrets can get out and the firewall actually keeps the secrets in. I can't really explain how that works here on this call, but we can give you additional information about it. The other separation is that our HSM is a multi-tenant and multi-customer. And what happens is if you've seen that mini HSM, that's a small single HSM, basically the vault has like 100 of those. So the HSM actually is comprised of at least 100 different separate physical chips, which obviously provide complete isolation between customers within the HSM. And within a single chip, there's also isolation and levels of protection between secrets depending on the level of authorization of the specific user and what they're able to do. I don't know if I've provided a full answer to that question, but I'll be happy to take the rest of it offline.
Great, thank you. We have another question here for Ron. It's a bit of a long question from one of our participants, Jonathan. Given that the SGA value is tied to flat reserves in banks, it is theoretically vulnerable to political conflicts such as sanctions on banks, if that local nation is engaged in behavior that other nations have disagreements with. This is similar to some of the potential issues that Libra might run into. For example, how does Saga intend to address political issues affecting the use or value of the SGA token? Thank you, Jonathan.
So the answer will be the same as what I've discussed in my presentation, diversification. This is certainly a risk or far risk of political conflicts between nations. And we hold our reserve in different banks, currently in different European countries, and are always working to increase our networks of bank holding reserves in order to limit the risks of political issues, as Jonathan has asked about, from harming the reserve.
Great, thank you so much, Ron. And thank you everyone for joining us today. If you have any other questions, feel free to drop them. That was our last one for now. And thank you to our speakers, Ron and Sabo and Carmi Bogot. We hope that you're all staying safe and healthy at home, and we look forward to hosting many more discussions like these. You're invited to learn more about Saga on their LinkedIn or at saga.org. And to stay up to date on upcoming webinars, follow Hub Security on LinkedIn and Twitter so you don't miss a beat. And you can also check out Hub's weekly digest on Medium for the latest stories coming out of the blockchain and crypto sphere. Thank you everyone for joining us today. Stay safe, stay healthy, stay inside, and we'll see you next week. Ciao.